We're seeing a pretty significant sell down today, and you really get the sense that Fitch has basically just put the brakes on what has been a pretty nice bull market run. So do you think this ratings downgrade in the US is justified?
Well, let's start by saying it's a great time to take a little bit of profit. And I think Fitch gave the market a reason just to take something off the table. I think the Fitch rating downgrade, I think it's got to be two parts. You've got to look at, as Diamond said, you've got to look at the US economy and go, that's great. We're certain, well, where are the recession bears? We're starting to see a few people say no recession whatsoever. But at the same time, a man in a beaver hat and a spear running around Congress didn't show a good side of US corporate governance. And I think so Fitch is basically saying, you know, there are things to watch. And I think they're looking more into the future than they are the recent past, because the US, as Diamond said, is very, very strong.
Yeah, absolutely. And I think you're right regarding the optics and the narrative around the United States right now. Sure, what happened on January 6th was really important. And at the same time, there's a lot of uncertainty coming into the US election as well next year. So perhaps that's what Fitch is looking at. But in terms of pure market dynamics, we've got the S&P trading around a 16-month high. MSCI Asia Pacific up almost double digits so far YTD. So markets have been pretty happy to put all of that to one side, at least for now. I'm curious to get a sense from you about where you see the direction of travel here. Do you think the bull market can continue from this point on, or is it time to really start fading this rally?
Well, I was a real outsider about a year ago, and I said there will be no US recession. If anything, 2022 was the recession. That was the massive cooling down in the economy. I still think the US has got room to play. S&P, their valuations are insane in certain places. But if we look through that and we go to small and micro cap, I've been saying it for a while, these are areas where the US is very resilient, especially with the decoupling and the global tensions around the peak globalization. If we look at one number I look at all the time, and I keep going on about it, it's one of the things I love, heavy truck sales. Yesterday again, the US heavy truck sales were through the roof. And this is a really good indicator that things are not slowing down. So I still think the US has some room to play. I would move away from the mega cap S&P, and I'd start looking through into smaller cap. But I think it's still a great place. I agree with Diamond in certain things. But I just US, be careful. Don't follow the crowd and start to look for more slightly unpolished gems.
There's a lot happening as well over the rest of this week and into next week. It seems as if ADP has blown past expectations. That's a pretty nice setup into the payroll number on Friday. Expectation is for around a 200,000 jobs gain for July. Do you think it's make or break for the Fed here, and what's the trajectory moving forward? Because that will ultimately determine the direction of travel for stocks.
Yeah, the payroll numbers is really important. I think we also need to look at the month-on-month consumption numbers, the wage growth numbers. So we're still seeing wage inflation in certain sectors, especially now in hospitality, which is really strange. But so I think that the Fed are in a really difficult place because the U.S. economy is wholly good, but at the same time, they do need to still make sure that the cap of inflation is put on firmly. So I think the Fed probably should take it. One of the things I think the Fed should be very careful. They have the ability to ruin things very, very quickly, and I think if they keep hiking, then we're in danger.